Hi everybody, welcome back to the Ledger Lounge. In this week's episode, we're going to discuss some questions that we've been asked by our clients over the last couple of months.
We're only laughing because some of them are, you won't believe what some of the clients ask us.
That's true.
But then if we asked the questions or had questions that were just asked every day, then it'd be dull and boring. And
That would be.
these are really, really interesting questions that we've got.
Yeah. Yeah, so recently we've had a question that's come through our website from Elvis.
The King of Rock.
The King of Rock. Uh-huh.
Does he have blue suede shoes?
Don't step on him. He's asked us, he said, "Hi, I have recently been selling a bunch of stuff on eBay since we moved house and realised I had a lot of stuff lying around. With those items I've been selling is a lot of wireless Magic Mac mice and keyboards with a couple
a
of
tongue twister,
I know,
isn't it?
with a couple of mates of mine having gifted to me over the last few years as they get so many as they are an Apple reseller and have a lot lying around. I've now reached 30 sales on eBay and have a few more to sell, and that is it. I am worried now due to income tax laws that I will have to declare this despite it all being gifted, and it is stuff that I have lying around and just want to get rid of. TBH, to be honest. Do you know if I can sell my last 10 or so without worry, or will I need to declare because I have sold a bunch of them, even though I am not a business? I look forward to your response." Did you respond? Thanks in advance.
If he listens to the podcast, he'll get a response. I will direct him this way.
It's really interesting, that, isn't it? Because a lot of people
I probably do sell on eBay without even thinking it's a business.
decluttering now.
Yeah.
I don't know if you see it on TikTok, but I do. Decluttering is like a real big thing. And I think especially since the likes of Vinted have become really big, everybody seems to be selling them. I mean, me and you do it, don't we?
Yeah.
We sell all our stuff on Vinted. I think it's going to crop up a lot more often this than we think over the next couple of years. I've made...
No, I think you're right. I think on the website, we've got a blog that was done back in 2021, I think, about eBay traders. We updated it again this year because consistently it's been the one blog piece that people look at, and it's outperformed every other blog on the website.
Oh,
So
wow, really?
there must be clearly a lot of eBay traders who got an interest in that. I think a lot of it depends on the value of the sale. So Elvis mentions 30 items, but if it's 30 at £1, or is it 30 at £100, it could, it's a difference. So there's this thing called the trader's allowance, isn't there, that we've talked about before.
Yeah.
That is £1,000 a year.
And that could be going up, couldn't it?
Yeah, but that's in a tax year. And you're right. I think at the last budget, they talked about maybe increasing it to £3,000.
Yeah, 3,000, which I think is fair because it's been £1,000 for a long, long time, hasn't it?
It has, yeah. So maybe it'll go to 3,000, but at the moment it's 1,000, and that's what we need to go at. So if Elvis has sold items worth £3,000 in a year, then he's going to have to do something about it and declare it.
I mean, £1,000 is not, over the course of 12 months in a tax year, it's not actually that much. If you're just not a reseller and you're just a person, it's not a huge allowance. I do think it's quite unfair because you're going to get people falling into that category, like me, who have just had a huge clear out on Vinted, and I have. And mine's up to £700.
Yeah, I'm just thinking I'm looking at my garage in my head thinking, well, Kurt's got 3 sets of golf clubs in there. If I fell out with him and decided to sell them on eBay, I'd have to pay tax.
Yeah, you would. And eBay reports to HMRC now, doesn't it?
Yeah, so every January, if you've got more than €2,000 of sales equivalent, so what's that, about £1,700 or so, or if you've got more than 30 transactions, eBay will report to HMRC on the previous years. So then they're going to find out about it anyway.
I might be wrong, but don't Vinted do that now as well?
I'm pretty sure they do,
people are using Vinted to
buy and
for
resell.
more than what it was actually there for.
Yes, they do. I think this was a European
because people have made a company
decision.
out of it, haven't they? By buying something on Vinted, for example, a pair of trainers for £5 and reselling them on Vinted for £45. You see it all the time, don't you?
A thing on TikTok that seems to be big at the moment as well is people going to charity shops, picking things up and then reselling them on Vinted.
Okay.
And there's people who sort of vlog their sales for the week and they'll sort of say how much they bought it for, how much they sold it for on Vinted and what the profit was. They never quite mention the tax on it. So,
Well, everything's, I think that's it. You're selling a dream, aren't you?
Yeah.
And actually, tax isn't really a dream for anybody.
No. Well, it'd be pretty sad.
And I suppose our job is to make sure it don't become a nightmare.
True, yeah.
It's something that got picked up. I think the explosion in online retail and selling through eBay during COVID meant that more and more people were doing it. And so they brought these rules in where eBay were forced, and like you said, Vinted, the online retailers were forced to tell the government of transactions. And the whole reason behind it is that they want to find out who's making money and get more tax out of them. I think one thing to bear in mind as well, that £1,000, it's sales. So if you're receiving money from eBay, eBay's fees are out of there.
Yeah, that's true, yeah.
And it's not about that. It's about the gross sale.
So if you sell something for £100 and eBay take £5 in fees, you only get 95, but the 100 counts towards your trading allowance.
Yes. But the other thing to bear in mind is that your £1,000 resets every year. So it's per tax year.
That's right, yeah.
So being strategic when your sales might mean you can do 999 in 1 year and 999 after the 6th of April.
Yeah, so that might
and that'd
all
be 2,000 in a week.
Yeah, in 1 week.
Or 1,998 in a week.
But it's split over two tax years, so that's fine.
Yeah. So Elvis, hopefully that's helped. And if you need any assistance, you can reach out to us and we'll help you with your tax return.
Absolutely. If he's going to carry on selling those last 10 items, that'll push him over his 30. And if he's gone over the limit, then if it's within one tax year, he will have to do one. But you've got to take that into account as well when you're doing buying and reselling. That if you want to do it above this level, that you potentially got accounts fees to factor in as well. Because you might think, I can buy something for 5 and I'll sell it for 20. For example, but then you've also got to think tax, and then I need to pay somebody to actually calculate it and do it.
And it does feel like that increasing the trader's allowance to £3,000 makes sense because what's the point in selling £1,000 of goods or £1,100 of goods and making £300 and then spending a load of time?
It almost becomes, what's the point?
What's the point in doing it?
Yeah.
So I think to encourage a bit more trade, maybe the £3,000 would.
I think it's time for it to go up anyway. It's been 1,000 for as long as I can remember since I've done this job. Yeah. How long for you?
I didn't have traders when I started. It certainly wasn't in pounds. It was in shillings. The next question we've got comes in from Tyler, who has just registered as CIS and he's looking to do a self-assessment return. He started to be CIS registered in March and he's asking, do I need to do a self-assessment return as it was before the tax year? It's his first self-assessment return, so he's not really sure what he's doing. And he is looking for some advice from James Scott.
I know there's this £1,000 allowance that you can have before you have to register for self-assessment, but I suppose he's not put exactly what he's earned, but it would be I would advise that he does a self-assessment anyway, because he's had tax deducted off him that he may not have to pay to HMRC. I suppose it all depends on, did he start on the 31st of March and receive £50 or?
He just says in March, so, but I think you're right. I think if he's had tax deducted, he probably wants to get that tax back if he's due it back.
He might have also been an employee up until March 25 and then so he might, he probably does have to do a self-assessment.
I suppose the wider question about CIS is
what is it?
What is it and what comes under CIS? Because that's always feels to me like a grey area that people seem to not understand.
I don't think people, companies really understand. It's not a choice. I've had quite a lot of clients before where they've gone, well, I don't want to do that. Well, unfortunately, you have to. They don't want me to take 20% off them. Well, unfortunately, the CIS registered, so.
So if you're a builder and you get a job, for argument's sake, building an extension on somebody's house.
It's usually most tradey type. It's construction industry scheme, isn't it?
Yes.
So it's all your tradey men and women. I'm not just going to say tradey lads. There might be some women in there as well.
But your builder brings in then an electrician, a plumber, a decorator.
Yeah.
Plasterer. All of that. Those elements are going to be subcontractors working for the contractor, who's the main builder who's building the extension.
Yeah.
So each one of those is a subcontractor. Each one of those should be dealt with under CIS.
That's right. Yeah. And that means that you're automatically deducted 20% tax out of all your wages before you see it.
If you are registered.
If you're registered. Unless you're on emergency, which is
if you're not registered
30.
under the CIS scheme, you'll get deducted 30%.
30%.
Yeah.
So most people avoid that in the first instance by becoming registered. Sometimes they get it for like the first couple of weeks, and then that prompts them to get registered because they want to get that 30 down to 20. But it means that they're getting no personal allowance all year, which is why they have to submit a self-assessment.
It works really well for some subcontractors. Certainly on the 6th of April, we'll get a raft of subcontractors that'll send their books and records into us.
Yeah.
And then they'll want that tax rebate that a lot of them get very quickly. And then they'll go on holiday with it.
Yeah.
And it's almost like a little savings
They
pot
have
for
their
them.
own deadline. I need it before the 15th of July because I'm going on holiday at the end of July.
Yeah. I think it works well, not being stereotypical to the tradies, but it's taking the tax away from them before they've got it, so they don't have to pay it over at a later date.
HMRC have received it.
Yeah, they've already
in
had
12
it.
instalments rather than in hoping that somebody's going to pay it by the 31st of January.
And 95% of the time, like you said, they are getting a refund because their income, less their expenses, the profit, tax due on that is usually less than what they've had deducted because they don't get the personal allowance incorporated into the 20% tax deduction. So everybody gets the 12,570.
So what happens to so I'm a subcontractor and I'm working for you as a contractor and you pay me £1,000 for that week. So you're deducting £200, giving me £800 a month. What happens to that £200 then?
So the contractor would every month, along with if they've got employees on the PAYE scheme, would submit a CIS return to the HMRC by the 19th of the month. It's payable by the 22nd, isn't it? And they would pay that tax. The tax that they've deducted from the subcontractor, they would pay it over to the HMRC every month.
And you get a voucher in return every month, once a month.
Yeah, so that's your tax records, isn't it, to provide to your accountant a CIS statement?
Yes.
Yeah, get one on the 5th of every month, to the 5th of every month.
So I was doing a return for a client this week. I was using actually the Zero's CIS module, and that made everything so much easier because everything was, from the point it goes into the system, it's coded to a CIS code. It worked out the 20% deduction from the subcontractor, and then on a report had a list of all, and it totaled it as you went along, so in real time, and it had a button to say send statements, so you could just press a button, email the statements to the contractor every month. So they are always in full knowledge of how much they've got, and especially as we head into MTD, this is going to be really important because if they're a contractor that's earning more than £50,000 after next April, April 26, they're going to be reporting on a quarterly basis.
And some subbies, as we call them, subcontractors, they give us annual statements. So when MTD comes in, that's not going to be good enough because they're going to have to start getting the monthly ones. They get an annual tax summary of the full year. So they're going to have to look to start changing that from April if they fall under the MTD umbrella.
So I think in this instance, Tyler is registered, which is good. So you have until, I think it's the 5th of October following the tax year in which you start to be self-employed to register. So he's done that. That's good. Otherwise, he would have been on the 30% deduction. And I think he'll have to do a tax return. And then bear in mind that come April 26, if he goes over £50,000 of turnover, not profit, turnover, that he needs to look at MTD as well.
Yeah, and probably all the subcontractors will fall in it from April 27 because the band lowers down to 30,000.
That's right. So certainly we've done that segmentation in the office, trying to work out which clients fall in and which ones won't. And you're right, I think most of the subcontractors are going to be on quarterly returns from April 27.
Yeah, because the tradies are paid quite well, aren't they?
Yeah, it's a shame I'm not a builder.
No, when Steve told me how much it would cost us to get a brick wall rebuilt, I nearly fell over. And I thought, I'm in the wrong game here.
Pass me a trowel. Next question. Can I give my staff vouchers at Christmas?
Matthew.
Maybe.
Damn it.
It all depends. Yes, you can give your staff vouchers at Christmas. But if they're over a certain amount, they're going to be taxable. So you can give your employees can have what they call non-cash vouchers. So like an Amazon voucher or a Tesco voucher.
Something that can only be spent at a retailer.
Yes,
and
I
can't
think
be
if you look on the
exchanged.
card, it'll say redeemable for 0.00001.
Yeah, there's no value to it.
So there's no value to the card.
Yeah. So you couldn't walk in somewhere and swap it for £50 cash.
No.
No.
They won't accept it.
So the voucher has to be less than £50 or less per employee, and it can't be in cash. And in that case, you could pay. There'll be no tax or national insurance on it for either the employee or employer's NI for the employer. So it can be quite a nice way of giving a Christmas bonus or a
Yeah.
birthday bonus or an award for somebody who's been there 10 years instead of a Rolex.
They call that a trivial benefit,
Yeah.
don't they?
Trivial benefit, yeah.
Yeah.
And the other one is directors. So one thing to bear in mind is that directors of their own company, so small companies, call them closed companies, which is most small businesses, it's restricted to £300 a year. But there isn't a limit for employees. But it can't be
Right.
related to performance, so it can't be because you've done a good job, or it can't be part of your contract of employment. It's just got to be an ad hoc.
Yeah.
That's interesting.
Voucher.
So if you're a director, you can only, in one financial year, have up to £300 in vouchers, tax and NI free.
Yes.
Whereas as long as each individual voucher for an employee is not over £50, they can have that as many times as you'd be willing to give it to them, as long as it's not performance related. So that's quite a good loophole, really, isn't it? Well, not a loophole.
I think
but
for both, if you're running your own company as a director, I think,
We have had a client that has done
yeah,
that
I think
this
we've had a
year,
few, yeah. Yeah, I think it's a nice little bit of tax planning that
Yeah.
a director of his own company can take £300 without any tax and get it allowed for corporation tax as well.
Question from Dan. Should I have a group of companies?
It depends. There's loads of pros and cons to the structure. And I think first off, what is the structure?
Yeah. So,
So-
what is a group of companies?
Yeah, so it's where you'd have a holding company, or sometimes referred to as a parent company, which owns shares in multiple other companies, which would be considered the group,
Yeah.
rather than each company being a standalone entity. They're all sort of under one umbrella of the holding company. And there's pros to that, which mean that your assets are protected because each company, so we're going to call them A, B, and C. So assets in company A are held in the name of the parent company. So they're protected in that way. So if company A falls into debt, the assets are protected under the parent company.
Yeah.
They couldn't be taken away. So that's quite a good.
I think that's quite a strong argument if you've got multiple businesses
Yeah.
that you can keep the assets, and assets is cash as well. So you could have cash in the holding company, protecting it from maybe the riskier elements of the business, which would be trading companies.
Yeah, so that's a point as well. The companies under the parent company, so company A, B, and C, don't all have to be in the same industry. So they can be completely different and completely different risk levels. So you could have like properties in one company, a trade in another company, and then another completely different trade
Like a cafe or
in
something.
So you
Yeah,
could,
I think that's why people would separate them, because they want to report distinctly on that. And like you say, you've got different risk levels. So one might be a startup and might make losses in year one, but those losses you could use and offset those losses against the profits of maybe an established business in the group under the group relief. So it's quite a nice way of taking risk, but I suppose it's risk mitigating that risk as well. And if you do lose money, you're going to get tax relief through one of the other
elsewhere,
companies.
yeah. So it's quite a good way to look at things as sort of as one, as a whole, and individually as well. So each entity or trade has got its own company.
Yeah.
But you're looking at the tax point from the umbrella of the parent company. So yeah, I do think that's quite a good argument to why it's a good thing to do if you've got that sort of structure where you're setting something new up.
Should mention the cons as well. So
Yeah.
you could have a single company doing those three different businesses under the one company, and from a cost point of view or an administration point of view, it's a lot simpler. Whereas you've only got one, so you only have one set of accounts to do. But you could end up doing with a group company, with a holding company and 3 subsidiaries, you'd end up with 4 sets of accounts. So inevitably, there's going to be
fees are going to go up.
Going to be more cost. So it's then about weighing up, and it's in any business decision, isn't it? What is the cost versus the benefit? It's the same thing.
You can also do management charges between the parent company and the companies ABC, I'm going to call them the baby companies. The baby companies underneath the umbrella. So that's something you can do, but that's perhaps a con as well because you've got to monitor that all the time. It's something you've actually, either you or your accountant's got to raise invoices between each company. So that could be an extra admin step that could be considered a con, but also a pro because it could save tax. So it's 2 sides to it, I suppose, to doing that, to management charges.
And things can get a bit complex as well. So
sometimes, if
you're borrowing from a bank and maybe the startup company I was talking about before needs to borrow money to finance its growth and its operations, the banks might require a cross guarantee, what they call a cross guarantee. So they might say company A that's profitable and been established for 20 years and company B is the startup. Then they might say that we want company A to guarantee the liabilities and this loan of company B that we're going to, and that'll be a condition of lending. If that's the case, then that element of protection of the companies from each other goes because the bank will be able to call on that guarantee should company B go bust.
Yeah, so it's not all wonderful, shiny and rosy, I suppose, then in that scenario. Another point probably would be that it's probably not ideal to set up in the first instance as a group. I mean, you can, but I think you'd like to perhaps have at least one of the companies well established before you set up a group structure.
Yeah, because then you've got something to protect.
Yeah.
Most of the time, if somebody comes along, you wouldn't say, let's set up a group immediately. You'd probably create a group as time goes by, and there's another element of the business that needs another company. So then you create a group.
Yeah, I think
I used to have a group. I don't do it anymore, but I used to have a group of companies.
I quite enjoy doing
company loans.
Yes, into company loans are always a challenge.
I didn't mind doing the job. I didn't mind doing the 4 different jobs for different companies at all. It was when you knew things balanced, then all of a sudden, 3 months later, they don't balance, and you've got to look back through all the intercompany transactions and find.
But didn't we find a really
management charges
tool,
usually?
Found a really good tool on that. That's reconciled
Mayday.
Across Mayday. That was it.
It was Katie who found it,
right?
But I couldn't use it because.
Why did it not work for you?
You used up all the licenses for your companies.
Sorry.
So I had to do it all manually.
That's just so Katie in it, keeping it for herself.
Selfish gal. Yeah, but it was good actually. It was a bit of a godsend, that, to be honest.
It was.
So me and Matthew have got a client that we work on together, and I quite enjoyed at this particular client's year end. I don't know, this is going to sound really, really sad, but looking at the group picture and moving things around and for tax purposes and moving the loss from one to another and saving them tax, I just find it quite a nice round off to the end of each one, and it's nice, isn't it, to save your clients tax?
Yes, it is. I think that's one of the most pleasing or the most rewarding elements of what we do.
Yeah.
Is using the knowledge that you've got to suggest a course of action that saves some tax.
Yeah, that's right, yeah.
And they'll go, I love my accountant.
I love my account, yeah. I love my accountant.
I have actually said that on the phone before now. Like when I've said bye to a client, I've gone, love you, bye, and then
Oh no.
Oops.
You get blocked after that.
They left.
Is that the same group? Is that the same group client that we don't act for anymore?
Definitely not.
I've had a client call me Mum.
Mum?
Hey, Mum. What? You're 20 years older than me.
Right, so final question.
A few indications.
This come through this was a phone call, wasn't it? Last week, off client. My daughter has always wanted to be an elf and has now got... Why is it so funny?
Same.
And has now got a job in Lapland. What are the tax implications? I know
Katie,
we've
when
not
we
made
were
this up.
researching this question and answer episode, we said make sure they're genuine questions.
It is. You want to see my search history since Matthew mentioned this question? I've just been looking at elves all the time.
How do I get a job as an elf?
How do I become
It
an
does
elf?
sound quite appealing to me, Mrs. Christmas. I love Christmas.
I just think, imagine the stories that you'd be able to tell like that. She's only young, isn't she? Early 20s.
Yeah, probably 20. I think she's currently travelling in the Philippines. So
Yeah.
she's having to cut short her travelling
To fulfil her elf
to go
duties.
from the Philippines to Lapland in about a week. So that'll be a challenge in itself, won't it?
God, she'll be shattered.
I couldn't be an elf because I'm 5'7". You definitely couldn't.
No.
He'd actually be like Elf in the film.
I have been to Lapland
Oh, I'm so jealous.
and got a photograph with Father Christmas.
Have you?
Yeah, sat on his knee.
No, you didn't.
He's got a
You
funny
wouldn't have
look at
known
it.
which
He's like
one
a
were
grimace.
Oh, funny.
Anyway, the tax implications
Yeah.
that Nick was asking
Yeah,
about. So, as a UK resident for tax, you're liable to pay tax on all of your worldwide income, and that's the same for everybody, whether you're an elf or not. It's not just your UK income. So, if you earn money in, I think Lapland's in Finland, isn't it? So you earn money in
Yeah,
Finland,
in Finland, yeah.
then that forms part of your income. But you might find that locally, the elf government wants to take tax off you in Lapland.
Finland will want it because you're working in Finland, so they might want some tax.
So
Yeah.
there's an agreement called a double taxation agreement, which means that you only pay the higher of the UK tax or the Finnish tax. So if UK tax is higher than you've already paid in Finland, you'll pay a little bit more, or you'll pay the difference. It might be a lot more, but it might be a little bit more.
I'm sure it's a lot more in the UK versus
I don't know. I
Finland.
think Scandinavian taxes are quite high.
Are there?
Yeah. Yeah, they have a very high tax economy.
They have a high benefit
Yeah.
as well, don't they? I suppose that's why.
And so you would pay the difference. And if the UK tax bill was lower, then you wouldn't pay any more tax in the UK.
Yeah, because you've paid what you owe
'Cause you've already
already in
paid it.
Finland.
And presumably it's only a temporary role. Like, she's not going to
Gonna
be doing
be
it for
She might be
5
making
years.
toys through the summer.
No, it's a seasonal thing though, isn't it? Like, she's probably going October
Yeah.
till...
I think she's going
January,
October till January. Yeah, they must
I
have.
wonder if you then go back every year, like if you...
Once you're in, you're in.
Once you're in, you're in.
Yeah.
Elf crew.
Maybe we'll get her on the podcast at some point and ask her about her experiences as an elf.
If she does go every year, does that make a difference to what she has to do each year? Or if it's just a one-off?
No, I don't think. No, it doesn't, because each year you determine your UK tax residency. So each year, if you're a UK tax resident each year and you spend so much time in the country, then you're going to be determined to be a UK tax. If you're out of the country for,
Is it 90 days?
90 days, isn't it?
it's 90 days, yes. And then there is a 4-year rule as well, I think, around that.
Right. So she'll have to let us know if she just does it, after she's done it this one year, if she likes it, if she's going again.
Yeah.
Finland's in the EU as well, so going to be restricted to 90 days anyway.
Guess she will, yeah. First couple of weeks in October, then she'll only have 90 days from when she lands in.
So she's not going to start work on the 23rd of September, is she? She'd have to leave before Christmas.
Yeah, and Santa won't allow that.
No.
Is that with a work visa? You get 90 days, or,
No, I
or
think
is
it's
that
these
longer?
new EU residency rules, isn't it, since
Right.
we left the
Since
EU.
we left.
Yeah.
Oh, I would have loved to have been an elf.
The Ledger Lounge is brought to you by James Scott Accountants in Oldham, Greater Manchester. Please like, rate and subscribe wherever you listen to the show. To find out how James Scott can help you build a better business, visit jamesscott.com. This podcast is a QPod production. Visit kupod.co.uk for more information.